Everybody, it's Stephen A. Williams, president and founder of the creditrepairshop.com. And in today's video, we're going to talk about disputing negative credit, disputing collections, charge-offs. And we want to start it off by saying that using the CFPB is not the place to dispute negative credit. I'm going to repeat that again. The CFPB, Consumer Finance Protection Bureau, is not the place to dispute your negative credit. Anything on there. It is the place to file a complaint if you've been wronged by an original creditor, if you've been wronged by a debt collector, but this is not the place to use to dispute negative credit when you're trying to repair your credit. There is a process that you need to go through. And also, just in case you haven't been watching the news, only about 2% of the complaints that are submitted to the CFPB are even being forwarded to the original creditors or debt collectors because they believe that they're frivolous. People have been filing false police reports. People have been abusing the system. The system has been overwhelmed. And as of right now, and as of last year, if you watched Representative Clyburn's report, is that the bureaus have been able to take advantage of this by not uh, processing disputes, and the CFPB has been overran, and they have not been forwarding the disputes because they feel that from all of the other fraud that was put into the system by people having people or credit repair companies filing these fake reports or false reports, that they're not going to really uh, move forward on those anymore. Like, I mean, they say 2%. I believe that it's even less than that. But let me just read for you before we continue what the CFPB is actually even saying on their website. Like when I read this, this will even probably get your attention a little bit more. It says, "What if my dispute is ignored or I disagree with the result of a credit report dispute?" Now, most people would be like, "Well, I'm going to file a dispute." Or I'm going to file a complaint with the CFPB. This is exactly what the CFPB tells people to do. Consumers sometimes file multiple disputes and even bring lawsuits to get inaccurate information corrected in their credit reports. Now, key word, they bring lawsuits, not the CFPB. When consumers make disputes, they often fail to get an adequate answer. They often fail to get an adequate answer. So they're telling us that there is a problem in the system, but this is just what's going on. And then it says from the credit reporting company, they failed to get an adequate answer or any answer at all from the credit reporting company. You have rights under federal law if this happens. So it says here, under the Fair Credit Reporting Act, which is federal law, among other rights, because states have individual rights too, you can dispute incomplete or inaccurate information on your credit report. So you always have a right to do that. Don't let anyone tell you, any bureau tell you. Sometimes they'll send that infamous TransUnion or Equifax letter saying that you have a third party, or they suspect the third party is trying to work on your credit without even answering the question of what about the information that they submitted. So it's just like they're trying to get you to not work on your credit. So once notified of an error, the Fair Credit Reporting Act requires that the credit reporting companies to do a reinvestigation of after you dispute the inaccuracy or completeness of the information unless your dispute is frivolous. So now, when they say frivolous, that is left totally up to the bureaus. And that's what gets into this takes work to get this job done. There's been multi-million dollar lawsuits that have been won by people who have sent in disputes directly to the furnisher and to the credit reporting agency, and nothing was done. So if you know that that's out there, you need to prepare yourself of the hill that you potentially have to climb. Not to say that everyone has to do it, but there's a hill that everybody is going to have to climb. Yours might be higher than other people to be able to get your credit repaired. And I'm going to get to some answers on those, some solutions on what you need to do to be able to work on charge offs and collections on your credit reports in a second. But I just want to read this because if it can save you time from trying to do some of these things that people tell people to do, you can move, you can get down the line further on the things that's going to matter to get your credit repaired. So uh, you have a right to add a statement to your credit file. This is something where, say for instance, you have an inaccurate item on your credit report or something that's incomplete, because it could be an account that you had, but it's incomplete. They're not showing everything the way that it's supposed to be, so it's unfairly hurting your score based on the algorithm. You can actually add a statement to that. From my personal experience, adding the statement to it matters if you're trying to go get a mortgage and there's something that happened, like maybe you had a late payment or something like that, and you want to be able to have that reasoning in there if you're not able to get that late payment reversed. That's a good time to have that in there. But if it's something where you maybe had medical issues and you want to write a statement about what happened, maybe the deductibles, or maybe it was unexpected, family, something happened with the family, and now that it's getting resolved and that you're building your way back, that would be a good place to put a statement. But for a regular, like a repo and stuff like that, I don't think that statements really have any value in those sections right there, because any of those types of accounts are going to just basically be judged based off of what you're actually doing. So if it was a repossession, foreclosure, stuff like that, it's just gonna, if another bank is looking to finance a home for you, yeah, they may consider that statement, but they're basically gonna judge you based off of what you're doing on your credit right now and what you've been able to get resolved on your credit. So they're saying that you can add that statement, which you can always do. I think it was up to 100 words in that statement. You have a right to bring a lawsuit. Now, the key word, you have a right to bring a lawsuit. They're not talking about the CFPB bringing a lawsuit for you. They're talking about them doing it. And as a matter of fact, even if you go to your state attorney general's office, you're going to get the same result. They're going to tell you that you have a right to bring a lawsuit, that they're not going to bring the lawsuit. And then they say that you have a right to speak to an attorney, and there's some other free legal services that you can uh, reach out and get services for. And before I move forward on what you can do with collections and charge offs, um, when you reach out to an attorney about dealing with stuff on your credit, you got to make sure that you're getting someone that is qualified for that. So if you have a legitimate issue, I do have an attorney that I can refer you to. Because this is federal, he can handle people in all 50 states, but it has to be something legitimate. So you need to do a little bit of your homework. So when it's passed over to him, he can take care of it. And the fees are actually not paid by you. That's why you have to understand how this works, because if you go to an attorney over something like this and they do not, and they try to charge you, you're dealing with the wrong attorney, because what they should do is review it, and then they should know if this is going to be something that they'll be able to take forward, because they're going to always get their fees paid for them. That's actually written into the law. So now let's talk about uh, charge offs, and let's talk about collection. So one of the biggest misconceptions that I continue to hear from people is that they're thinking that a charge off is something that they don't have to pay. They're like, they wrote it off, it's charged off, they no longer have the account. It's all done and over with. They're getting money from some secret account or whatever. that is paid. There's even been people saying that once it's charged off or discharge is paid. That's what they're saying. That is not true. What a charge off actually is an accounting entry that they have to make to take the non-performing accounts off of the books. If you have investors and you're in the banking industry and you have regulators coming around, you can't say that you have, you know, uh, $100 million in performing accounts when you have a certain percentage of them that are not performing. These are ones that where people have either been paid directly for more than 180 days. That has to be written off of the books. Now, anything in between, you had that little bit of a give and take. But if you stop making payments for 180 days, which is 6 months on a credit card, some other accounts like automobiles might be 30 days, depending if you got a subprime. Yes, I've seen them at 30 days, especially those buy here, pay here places, or 3 months with a regular automobile finance company. They're going to take it off the books. They're going to charge off the loan and taking it off the performing books. Now, depending on what type of account it is, there's going to be all of these different scenarios that could happen. So, if let's just take for instance a credit card account. A credit card company charges off your account. There's going to be this little gray period that you don't know what's going to happen with that account. It could either be sold, it could either be maintained, where they're going to hire a company to try to collect it from you. It's probably one of the worst times when dealing with a charge off is right at the beginning, because if you try to work on your credit right at that time, it's this account is like sitting right on, like it would be like right on the desk. They'll be like, well, what are you trying to do with this? So what I always tell people to do is, if your accounts are charged off at the beginning, be prepared to do this right here. So what I do is I tell people, if it's with the original creditor, you want to do a verification of the full account. Now, it's not a verification to say that it's not your account. That's not what you're trying to look at. What you're trying to do is to make sure, because you probably were going through some emotional uh, things at that time, or loss of job, or whatever went through that made you not be able to continue paying on that account, that you want to get an audit of that account so you can just see what is what. Like, are all of these charges yours? One brings to my mind a gentleman who is a client with the company. What had happened is he had went into a major depression, and his son was actually charging up a lot of stuff on his credit card. And he was just like, he said he knew it was happening and he didn't know it was happening. But regardless, he's going to be responsible for the charges. But it's good to know exactly what is and what isn't yours. So even if it was a relative who took your card, maybe you can get with them when you get ready to move to the next step, which is settled in that account. So if the original creditor still has that account, you verify, look at all of the charges, and then you go into a negotiation process to settle that account. That is the fastest way to resolve that account. Now, the other thing that could happen is that during that period of time, you may not even be able to do anything. You could call them up and they will say, we cannot accept the payment. That is probably one of the most uh, confusing things that have happened with clients, where they said they're ready to do something, the account was charged off, and the original creditor said that they cannot take a payment for it. Here's the reason why. It's probably being batched up to be able to be sold to a third party debt collector. And during that period of time, they're not going to do anything. They're not going to make any mistakes where they're going to take a payment from you and accidentally bundle it up. Now, you might be saying they must be crazy. Why don't they just pull that account out of there? It's not like a mom and pop operation. They have their processes in place. And really, once these accounts are jumbled up and ready to go, they're just really going out of the door. See, the credit card company, what they're doing is they're looking at uh, making sure that their current customers that are paying or have a good experience, and they're looking at advertising to get new clients to start using their credit card. So that's what they're good at doing. They're not good at collecting the money and going, after people and lawsuits and all of that. Not to say that some of them aren't doing that. There are some credit card companies that will sue you, like American Express, Discover, Barclays, Capital One, Bank of America is starting to do it also. So there are ones that will sue you or go through a collection process after the charge-off period. But the majority of them, what they're going to do is that they're going to package them up and sell them to third-party debt collectors. So now, when it gets into the hands of a third-party debt collector, this is what you got to keep your attention on. Is that number one? It's not about saying that this is not yours. What it's about is making them prove everything about the account that they have. So the first thing they're going to do is they're going to reach out to you with a letter. And this right here. If you could just pay attention to this one spot, or maybe you got a letter recently, and if I'm about to tell you something that can actually have your debt go away if they violated this rule, is that if they sent that letter to you and it looks like it was from a third party, like they're the third party and then they had it with another third party mailing service, or they sent it on a postcard, or anything that looks like they disclosed your information to someone, that is a violation, and you can call them on that. You can write them a certified letter stating that they've shared your information with an unauthorized third party, and you don't even know how they got your information. They haven't sent you anything proving that you've given them permission or that they have permission to share your information. So that is like something that really blows a lot of people's mind when I tell them that, is that you can actually stop debt collectors early by doing that. Okay, so the next thing after you verified that letter, if there was no problems with that letter, and also, one other thing before I move forward, on that letter, they must give you the right to dispute any or part of that debt. Like, it's really not a bill. They'll make it look like a bill. So if they forget that section in there, some of the times they'll make it very tiny. If they forget to put that in there, they have just violated the Fair Debt Collection Practices Act by not having that statement in there. So they need to have who the original creditor was, identify themselves, a little bit of the statement about what they're trying to do, the amount, all of that stuff, and then they need to notify you that you have a right to dispute any or all. So make sure you see that word, any or all. Some of the time they may say you have a right to dispute. That can be confusing because the way that they're supposed to make this letter, and you can go to the Fair Debt Collection Practices Act, they're not supposed to make that letter vague. They're supposed to be straightforward with that letter. And sometimes people will say, well, yeah, I had an account, but I dispute parts of it. But they don't know that they have a right to dispute part of it, because they said that you have to either dispute all of it, or implied that you have to dispute all of it. So that's another thing that you need to pay attention to. So now, moving on to the next step, is that this account was yours with an original creditor. So first, let's look at the strategy to get that negative charge off removed off your credit reports with the original creditor. This is going to be a two-step process. First, you're going to go through and you're going to do a validation of debt with this debt collector. This is the reason why you're going to do this is because of two important reasons. If they try to sue you in the future, you're already building your affirmative defense to be able to fight back against them, because you're going to be asking them for documents that they more than likely don't have. And don't worry, I'm going to give you a letter for that in a second. Now, the other part, though, is that when you know that they've purchased that debt, when they've identified that they purchased the debt from the original creditor, you want to use that information to have the information removed by the original creditor, that the account is either paid, or they could just choose to remove it based off of them taking a payment for less. You can use that information. Now, I do not provide you a letter for that, because this is something that we have to do uniquely for each one of our clients. But I'm telling you, the outline of it. You're using the information that you have from the debt collector, the third party debt collector who purchased the debt, to use that information to get that original creditor's information either changed to positive for paid for less, which will not hurt your credit reports, or you can get that information removed. You can give them the choice in your letter on which one you want to do. And you're going to do that directly with the credit reporting agency, and you're going to also submit that directly to the dispute department with that original creditor. That strategy does work, but you're going to have to craft your letters specifically uh, using the information that you have from the debt collection company and the original creditor. Now, dealing with the third party debt collector, you want to make sure that they give you everything to prove their claim. You want the original contract from the original creditor. You want the contract that they have showing that you have a relationship with them. Now they're going to try to give you a bill of sale that's going to have this portfolio information on there, saying that they bought this from ABC credit card company. That's not good enough. Let me tell you one of the reasons why is that it doesn't even have your name on there. Then you're going to want to see the chain of custody. See, you're building your affirmative defense just in case they try to sue you also. So you want them to give you the chain of custody. One of the things that you need to watch out for in that chain of custody is that was it purchased by a portfolio company and then sold to a third party debt collector? So this means that remember that first letter that was sent out? That debt collection letter, that first letter that was sent out, is not technically legal because a third party of a third, it's really the fourth party that has that debt. And you need to look in that contract, that sales contract, to see if this wording is in there. Is that in some of those sales contracts from credit card companies, they will state that the third party debt collector who purchased the debt or the portfolio company who purchased the debt is not allowed to sell it to another debt collector. The reason why is because they've had trouble with when they've done that. So they were like, don't resell it to anybody. You either sell it right back to us or you go out and collect it because we don't know what this other third party is going to do. And debt collectors have a bad reputation, so they're going to always, be afraid of debt collectors doing it. So once you've gathered all of that paperwork and they've submitted everything to you, which some of the times they won't do that at the beginning, so you're going to have to go back and forth with them. And don't worry, I'm going to give you a letter that'll get that all started. But once they give you all of that information, the next part of that is that you want to make sure that they give you the claimed amount. And when we say claimed amount, we don't want a couple of statements saying that you owe $5,000 for a credit card. We want all of the charges. We want all of the accounting records because they're saying that this account is yours. This is the amount. They know this for sure. All of that stuff. You want them to prove that claimed amount. Now, here's a little secret. They can't get that claimed amount from the original creditor. There's problems with them being able to get that information. So you want to just make sure that they get all of that information because if they don't get it, then you're gonna be letting them just run all over you when you could actually stop them if they don't have all of that paperwork. You'll usually this is what'll usually happen is when you do this, they might try to respond at the beginning and send you some documents, and then the second time it kind of amps up. They might even threaten to take you to court, this type of stuff. Third time, they're going to probably start to try to offer some type of a settlement. That's when you know that you kind of really have them because they know that they're not going to be able to get all of that information. And then fourth time, they'll probably send something saying, hey, we're going to cease all collections. They might try to sell it. You need to keep all your paperwork showing that they sent you a letter saying they're going to cease collections. And then if they try to sell it to someone, you'll have a document and you'll be able to actually sue both of those parties if they end up doing that. So uh, if you have debt collectors coming after you, I want you to grab my 3-pack of letters. The link is below this video. I have a statute of limitations letter for debt that's past legal statute of limitations. I have a debt validation letter, and I have a cease and desist collection activities letter. That will help you get started with everything that I've just talked about in this video. I do ask for a donation on those. It's well worth it because it can save you time, money, and frustration. Those letters have actually save people from having stuff either added, get stuff removed, and it's definitely helped them to get out of collections and charge-offs. If you need help with your credit, please visit us at thecreditrepairshop.com. Watch the video, what makes us different, so you can see my 8-point validation process, my two-phase settlement process. If you need your credit reports or scores, go to the website your3scores.com to grab your TransUnion, Equifax, Experian credit reports and all 3 scores. Please like this video. Please subscribe to the channel. Post your questions and comments. This is Stephen A. Williams, President and Founder of thecreditrepairshop.com.